Hi guys, it's Wolfie here. If you are new to my channel, please hit like and subscribe button. I don't make any money out of this, and the whole purpose is to enlighten the crowd. More subscribers means more motivation for me to put a good quality content. The Federal Reserve for the third time this year cut its benchmark interest rate on December 25th as its effort to control inflation continued. Though rate cuts have made the cost of borrowing cheaper overall, one of the biggest expenses Americans face has only grown. It's become harder to buy a home. Home buyers have seen mortgage rates stay largely close to 7% throughout the year, and home prices keep climbing. What's going on? Mortgage rates have remained elevated throughout 2024. Most recently, right after the Fed's decision was announced, the 30-year mortgage rate jumped 22 basis points between Tuesday and Thursday, according to a survey compiled by Mortgage News Daily. Home prices also remain elevated and hit all-time highs this year, even with fewer buyers in the market. The median price of a home sold in November increased by about 5% from the previous year to roughly $430,000, according to data from Redfin. The total number of homes presently for sale in the U.S. is still 26% below the typical level seen in 2018 and 2019, Zillow said. That dynamic has resulted in the housing market being on track for another multi-decade low. The fact that 2024 had fewer transactions than 2009 is wild, Leo Pareja, chief executive of eXp Realty, a brokerage, told in an interview. Back in 2009, nothing would sell, he recalled. The U.S. was then in the grips of the Great Recession, which was fueled in part by a burst housing bubble that had left millions of homeowners in foreclosure. In 2024, everything sells, and too quickly, and real estate agents can't find enough homeowners interested in selling, Pareja said. Yet transactions still remain at a low level. One reason for that is that mortgage rates have remained high, which hurts both housing demand and supply. Despite the rate cuts, mortgage rates remain at 7% due to financial markets' concerns about inflation in the U.S. economy. Mortgage rates don't directly follow the direction of the Fed's benchmark short-term interest rate. Instead, they tend to move in tandem with the yield on the 10-year Treasury note, which rises when investors see inflation ahead. The Fed's goal is to contain inflation, with the incoming Trump administration signaling its intent to impose tariffs on trade as well as tighten up immigration. Markets are expecting the Fed to cut rates at a slower pace next year, as consumer prices are expected to increase further. And that's indirectly pushing mortgage rates up. House hunters may face déjà vu in 2025. For home buyers and sellers, the increase in mortgage rates only makes it less appealing to jump into the housing market. Home buyers are already contending with an expensive housing market. Higher rates only add to the cost of financing a property, which dampens demand. Home sellers looking to move are facing the same dynamic but with an additional dilemma, giving up their ultra-low mortgage rate. And that in turn impacts housing supply. A higher mortgage rate would decrease the number of homes available for sale, as existing homeowners who locked in low mortgage rates during the pandemic would face a higher financial penalty from selling. Chris Deritis, deputy chief economist at Moody's Analytics, told in an interview. In other words, the higher rates go, the lower home sales go. Economists widely expect mortgage rates to fall over the course of 2025. But house hunters should brace for another tough year, one expert said. My advice to buyers in 2025, if you find a house that you like and can afford, don't hesitate. Home prices are less likely to crash anytime soon. My advice to investors is, as long as your cash-on-cash yield is better than the interest rate, it is not a bad investment. Good luck everyone in 2025, and make sure you like and subscribe to our channel. There will be a lot useful information published here daily and weekly. Yours truly.